Perhaps the person who wanted to start this whole talk about ADA being security is Michael Saylor, the Bitcoin preacher. Last year he said, "To be a commodity network, there has to be no issuer, no initial coin offering, no central organization, and if you study the history of Cardano, it's pretty obvious it's a security. It checks all the boxes. So I don't know how you actually get around intellectually to convince yourself that it's anything other than a security." Saylor explained that his belief that native tokens of proof-of-stake networks are securities and are therefore very risky. And eventually his prediction came to fruition. Cardano ADA in the crypto market just took a stab from the US Securities and Exchange Commission. The regulator filed a lawsuit against Binance and its CEO Changpeng Zhao for contributing to the decline in prices across the market. However, Cardano's development company, IOG, dismissed the SEC's claims that ADA, the blockchain's native token, can be viewed as a security. According to the complaint filed by the US regulator, Binance has been offering unregistered securities since its inception. These alleged securities under the US laws include Cardano, Polygon, Solana, Filecoin, Cosmos Hub, Algorand, and others. In the document, the SEC classified ADA as a crypto security, a term that was coined in the last 2 years. As if the claim was not enough, the regulator provided an overview of the token's history. Today, 3 entities are responsible for Cardano. 1, the Cardano Foundation, a Swiss entity that is a legal custodian of the Cardano protocol and owner of its brand. 2, IOHK, an engineering company controlled by Hoskinson and Wood, responsible for designing, building, and maintaining the Cardano blockchain. And 3, Emergo. To sustain their argument, the SEC claimed that these entities hold over 16.7% of ADA's total supply, or 31.1 billion ADA. According to the regulator, the companies sold these tokens to fund development, marketing, business operations, and other critical project areas. Regardless of the lawsuit, some crypto community members called the event a nothing burger, since the US regulator is yet to provide a clear legal framework for what constitutes a security in the country. In that vein, legal expert Collins Belton believes that this bad news could turn into a positive development in the long haul. Through his Twitter account, the expert stated, "This should actually be seen as a bit of a tension reliever for anyone that hasn't been widely deluded on hopium. This complaint has been hanging above us like the sword of Damocles, and letting it fall now in the depths of a bear is probably the best we can hope for." Belton also believes that the crypto market could be overstating the complaint. The lawsuit could finally release tension from key actors in the sector in the future, but as long as it's in the short term, not much change from the status quo. The SEC uses the popular Howey test to determine whether an asset is a security, especially with cryptocurrencies. The Howey's test core principle on the matter can be boiled down to the SEC law. An investment of money in a common enterprise with profits to come solely from the efforts of others, and, if that test be satisfied, it is immaterial whether the enterprise is speculative or non-speculative, or whether there is a sale of property with or without intrinsic value. To defend their actions, the SEC explained that the information publicly disseminated by Cardano IOHK and Emergo, including since the initial sales of ADA, have led ADA holders, including those who purchased ADA since March of 2021, to view ADA as an investment in and expect profit from the Cardano Foundation, IOG, and Emergo's efforts to grow the Cardano platform, which in turn would increase the demand for and the value of ADA. It appears that the SEC believes that ADA fits into the definition of security, hook, line, and sinker. The problem with that is that according to many, including Coinbase, is that the SEC relies on a test created almost 60 years ago and fails to reflect modern considerations and emerging assets. Quite outrageous if you ask me. It is also interesting to note that the SEC filed a lawsuit against Ripple, the company behind XRP, alleging that it was a security. The Cardano Foundation stepped up and defended Cardano. It stated the SEC's claims, which read, "The Cardano Foundation disagrees with the recent qualification of ADA as a security under US law. We look forward to the continued engagement with regulators and policymakers to achieve legal clarity and certainty on these matters." Input Output Global also contributed to this defense, noting that the SEC lawsuits filed against crypto exchanges Coinbase and Binance, which included ADA and a list of crypto tokens that counted as securities, contained numerous factual inaccuracies. According to the company, the allegations will have no impact on IOG's operations. Under no circumstances ADA is security under US securities laws. It never has been. Understanding how decentralized blockchain operates is a fundamental component in creating responsible legislation, IOG added. Plus, IOG argued that the regulation through enforcement actions does not provide the necessary clarity or certainty that both the blockchain industry and consumers deserve. The company also called out the SEC on its method of regulation by enforcement. This was initially demonstrated by Ripple when the regulator brought against the San Francisco-based fintech company accused of selling unregistered securities in the form of XRP. Input Output Global continues to welcome cross-industry collaboration with regulators to help develop frameworks, which not only safeguard customers, but do not stifle innovation within the communities building decentralized protocols. This latest filing from the SEC dealt a heavy blow, thus demonstrating that there is still a long way to go in this regard. Now, it is clear that the leaders in the crypto industry need to unite and work together to fend off the attack from regulators. The crypto world is more like a battlefield now. The SEC chair, Gary Gensler, has been hostile to the industry, going as far as stating that all cryptocurrencies other than Bitcoin could be securities. Now, where is this coming from? But moving forward, Charles Hoskinson, who has long advocated for the regulations in the crypto industry, acknowledging that this would promote institutional investment as well as protect investors, responded to the SEC. Hoskinson called on the crypto community to be united to fight against the government's attack on crypto. Hoskinson expressed his feelings in a tweet, and it was quite a lengthy one. With respect to Binance, I'm reading through the SEC complaint. It's over 130 pages, but it seems like the next in a series of steps to implement Choke Point 2.0 in the United States. The end goal is an agenda-based CBDC partnered with a handful of massive banks and end-to-end control every other aspect of your financial life. A regulatory event is where you have a debate about compliance with law or guidance. This event seems to be a political philosophical disagreement with the very existence of cryptocurrencies and what they represent. However, no matter the potency of these arguments, defenses from Colin Belton's, the Cardano Foundation, IOG, and even Charles Hoskinson seem insufficient to stop the SEC. And this is why a few experts have stepped up to air their views. Bill Morgan is one of them. In a recent Twitter exchange, legal expert and digital asset enthusiast Bill Morgan condemned the SEC's classification of Cardano ADA. Morgan took to the public to express his doubts, questioning the regulator's reasoning behind this assertion. Emphasizing the nature of technological advancements, Morgan drew a parallel between the evolution of smartphones and the development of cryptocurrencies. He argued that when creators bring in improvements and share information about their product's features, it is merely an attempt to stay competitive and stimulate sales. However, he addressed that the SEC seems to treat these efforts differently when it comes to cryptocurrencies like Cardano. As reported and stated earlier, the Cardano token is deemed a security by the SEC based on public information shared by Cardano, Input-Output, and Emergo, especially since the initial token sale. The lawsuit claims that buyers of ADA believe it was an investment in these entities, expecting to profit from their developmental efforts and an increase in the token's value. Two of the blogs on which the SEC relies on are from late last year. Apparently, they gave buyers of ADA from 2016 to 2021, who could time travel, an expectation of profits from the efforts of those trying to add functionality to the Cardano blockchain during that period, Morgan said. Morgan further speculated that Charles Hoskinson must be confident that the court will not deem sales or offers by Cardano as investment contracts or classified ADA sold in secondary markets as securities. However, Mark Fagel, an ex-attorney specializing in SEC law enforcement, offered a counter-opinion. Fagel queried whether there were 30 secondary market exchanges where smartphones could be listed for investment purposes, suggesting a distinction between traditional products and cryptocurrencies. Morgan admitted the difference Fagel raised, remarking that cryptocurrencies like ADA could be acquired outside of exchanges. He added that this distinction might exist, but was unsure if it alone justified classifying ADA as a security. These opinions seem solid, but at the end of the day, the final decisions do lie with the SEC. Perhaps when more evidence rolls out, we can finally call for a truce. But that's going to do it for today's video. Make sure you click on subscribe notification buttons, and I'll see you in the next video.